There is nothing wrong with fundamental analysis, but you can't be a dumb buyer. Start everything with a quote. Any fool can buy high and sell low. The wise man knows it's all in the timing. And my friends, think about when you go out to buy an expensive item, you're shopping around for a new car, a new house. Do you just pay any price? Oh, the house is worth $1.5 million. Do you just automatically write a check for that if you have that kind of money? Or if you're buying a new car and you see the sticker price, do you go in and just go ahead and say, hey, I'll pay that? No, no. You look for the best price. You should never pay more than you have to for anything. It is exactly the same with stocks and ETFs, but that's not what you hear. The fundamentals are important, absolutely. But just like with high-value securities or junk securities, both can be purchased at the most opportune or the least opportune time. You can choose to purchase any security you desire, but why would you buy one in a confirmed downtrend? If you guys remember when the market crashed, remember when we had the COVID crash, and we saw back in late February, actually starting in mid-February, that's where it peaked, and then as February ended, we saw the market crashing. Who would want to buy the S&P 500 when it was in the middle of a crash? Well, no one with any brains. You'd want to pick it up later after it was in recovery. That's what we're talking about. Fundamentals matter, whether it's something like an index like the S&P 500 or just a stock. Now, the myths of fundamental analysis. I'm a value investor. Have you heard people say that? I'm not going to deal with technical analysis. I'm just going to go with fundamental analysis. I'm going to invest in good companies. Well, again, that's a myth, my friends. You can buy good companies. You should. But don't buy them at the wrong time. Well, the next thing you hear is no one can tell the future. Oh, yeah? I tell you, when there's a weekly vertical crossover, that is our price percent oscillator crosses over the red signal line. It's called a weekly vertical crossover on our charts. We chart them every day. When you see that happening, I don't think it'd be a good idea to get into a practice trade when the market is crashing. I say practice trade because we're not a stock calling service. We're an education firm, but we want you to practice with us. And when we have a weekly vertical crossover going up, that is the big wave has now turned around and is moving up. That is the time to get into your practice trade. Again, you can, not tell the future, but you sure have a good idea where things are probably going if you jump on the right trend or get out of a bad trend. Price is always about fundamentals. That's another one. No, price is not always about fundamentals. It is not. Now, the value of fundamental analysis. It qualifies a security's intrinsic value. That is true. It does. It does do that. It examines the related economic and financial factors of a security. That is also true. And it helps you judge if the security is undervalued or overvalued. That is also true. So if something is highly undervalued and is going up, and you can read a chart, might be a reason to get in. If it's overvalued and going down, might be a reason to get out. What's the value of technical analysis? That's what we do every day. That is charting. That is what I showed you on these charts. Now, the value of technical analysis is that it forecasts the direction of price movement through an analysis of historic market data such as trends, price, and volume. Now, when we look at trends, and that's primarily what we follow, trends in price movement, we see that when we have these weekly vertical crossovers occur, and it's particularly helpful when our derivative oscillator, which is the only other indicator we use, crosses over at the same time, either down or up, we end up being able to find trends that typically work. In fact, this year, The first 11 that occurred in 2020, every single one of them were accurate. They range from about 2% at a low to a high of 29%, actually just over 29%. So again, those work for us. We like technical analysis, or charting as we call it. The magic of the weekly vertical crossover, when you go back in time and track something like the S&P 500, that's the 500 big stocks that are represented in the Standard & Poor Index, we find over and over again that the charts actually work for us. Not every single time. So far this year, as I record this, we're now into July. We've had 13 crossovers. 12 of those have worked. Only one betrayed us. Now, that's well over 90%, and that is extremely good, and that's typically what we see in any given year. So again, it doesn't behoove you at all to buy high and sell low if you can chart the market. So fundamentals, they are all well and good. We don't have any trouble exploring fundamentals, but to really see what's going on in the market and make sure you don't pay more for something than you have to, or that you don't buy at the wrong time when something is crashing, you need to be able to read a stock chart. And my friends, that's what we do every day. 10 to 15 minutes is all it takes with chartingwealth.com. We have a great book, but again, don't start off with anything except spending a few minutes a day with us, exploring the charts, listening, practice trading. You can print out for free in the show notes every day. We have PDFs for the daily market worksheet, weekly market worksheet, and trade worksheets. You can take all the trainings that we have online for free. If you go to chartingwealth.com and sign up, you'll get the daily trainings for free. They will come in your email along with our daily chart review. 10 to 15 minutes, that's all we ask. Again, fundamental analysis is fine, but don't be a dumb buyer.